What if your own brain is secretly sabotaging every investment decision you make right now? Yeah, that little voice telling you to sell low or chase the next hot AI stock? It's not your friend. It's a bias, and it's costing you thousands. Hey, I'm Shiba, your cute but clever finance pup, here to bark some sense into your portfolio. Today, we're diving into 9 investing psychology hacks to beat the market in 2026. With AI driving wild trends and stocks jumping like crazy, you need these mental tricks to stay ahead. No fluff, just actionable wins for beginners like you. Stick around, because hack number 1 could save your savings from a total wipeout. Let's jump in. Hack 1. Conquer loss aversion. You know that gut punch when you lose money? It's twice as painful as the joy of gaining the same amount. Studies show people hold on to losing stocks way too long, hoping they'll bounce back. Remember 2025? Folks clung to overhyped tech during dips, only to watch 20% more evaporate. It's like refusing to toss a bad bone because you already chewed it. Action step: set strict stop-loss rules, like selling if a stock drops 10%, and reframe losses as lessons. Track them in a journal to spot patterns. Boom, you're detached. But wait, the next hack tackles why you're following the pack straight off a cliff. Hack 2. Ditch herd mentality. Ever buy a stock because everyone's buzzing about it on social media? That's the herd at work, and it leads to bubbles. In 2026, AI stocks are surging, Nvidia up another 15% already this year. But chasing the crowd? 80% of day traders lose money following trends. Picture sheep stampeding towards a mirage, only to find dry desert. Don't be that sheep. Tip 1. Do your own research. Check fundamentals like earnings growth before buying. Tip 2. Set a contrarian alert. When everyone's hyped, pause and ask, what's the downside? Like if this hits home. This mindset shift alone could double your edge. Coming up, Hack 3 exposes why you only see what you want to see. Hack 3. Bust confirmation bias. You hunt for info that backs your picks and ignore the red flags. Bought into AI hype? You'll scroll past warnings about inflation risks from all that data center power suck. Stats say biased investors underperform the market by 5% yearly. It's like wearing rose-tinted glasses in a storm. You miss the lightning. Fix it. Actively seek opposing views. For every pro article, read 2 cons, and use a decision checklist: pros, cons, alternatives. Force balance. You'll make smarter calls on those 2026 trends. But overconfidence? That's the silent killer next. Hack 4. Tame overconfidence. Think you're smarter than the market? Most beginners do, then boom, losses pile up. Over 90% of day traders quit in 2 years because they bet big on gut feels. In AI-driven 2026, folks are overbetting on single stocks like they're sure winners. Analogy: it's like a pup thinking he can outrun a car. Adorable, but disastrous. Hack it. Diversify with index funds. They've beaten 80% of active managers over 15 years. And size positions small, no more than 5% of your portfolio in one bet. Humility pays. Teaser. Next up, why that first price you see is anchoring you to bad deals. Hack 5. Escape anchoring bias. You latch onto the first number you hear, like a stock's peak price, and judge everything from there. Bought at 100, it drops to 80, but you won't sell because you're anchored high. With AI markets in 2026, this traps millions. Research shows anchored investors miss 10% gains waiting for old highs. Think of it as a boat tied to a dock. You can't sail free. Break loose. Reset with current data. Use tools like price-to-earnings ratios today, not historical. And review portfolios quarterly, ignoring entry prices. Fresh eyes win. But recency bias? That's making you chase yesterday's news. Stay tuned. Hack 6. Counter recency bias. You overweight recent events, forgetting the big picture. Market dipped last week, you panic sell. But 2025's AI rally faded mid-year before rebounding strong. Stats? Biased traders react to short-term noise, losing out on long-term 10% annual S&P gains. It's like judging a marathon by the last mile sprint. Overcome it. Zoom out with historical charts. Look at 5 to 10-year trends. And dollar cost average. Invest fixed amounts monthly, ignoring ups and downs. Steady beats reactive. Comment below your biggest recent freakout. This hack keeps you calm in 2026 chaos. Next, FOMO, the fear that's got you buying high every time. Hack 7. Squash FOMO. Fear of missing out pushes you into hot trends at peak prices. AI stocks jumping 20% in January 2026? Suddenly everyone's in, but bubbles pop. 97% of heavy day traders lose money chasing hype. Analogy: it's like jumping on a crowded bandwagon right before it crashes. Don't let it dog you down. Tip: set investment rules up front, like only buy if it fits your long-term plan. And practice patience. Wait 48 hours before any impulse trade. Watch gains compound instead. Powerful stuff. But sunk costs? That's why you're holding losers. Let's fix it. Hack 8. Drop the sunk cost fallacy. You throw good money after bad because you've already invested time or cash. Stuck in a failing fund? You add more, ignoring better options. In 2026, with shifting tax rules and AI shifts, this costs beginners big. Studies show it leads to 15% lower returns. Picture pouring water into a leaky bucket. Stop and grab a new one. Action: evaluate holdings fresh. Would you buy it today? If no, sell. And celebrate cuts as wins. Free up capital for winners. Last hack incoming, and it's a game changer for how you view money. Hack 9. Master mental accounting. You treat money differently based on where it came from. Windfall cash gets splurged, while salary stays safe. In investing, this means risky bets with bonus money. But all dollars are equal, and this bias fragments your strategy. With side hustles booming in 2026, folks mishandle extra income. Analogy: it's like having separate dog bowls for the same kibble. Pointless. United. Pool all funds into one portfolio plan. Use buckets only for goals, like emergency versus growth. Track everything holistically. This hack aligns your brain for max growth. Whew, we covered a lot. 9 psychology hacks to shield your investments from your own mind in this AI-crazed 2026 market. Key takeaways? First, conquer loss aversion with stop losses to cut losers fast. Second, ditch the herd by doing your own homework. Avoid FOMO traps. And third, diversify via index funds to beat overconfidence and biases long-term. These aren't just tips, they're your edge against the 80% who fail. If this sparked an aha moment, smash that like button. Subscribe for more paw-some finance secrets every week. Hit the bell so you don't miss out. Comment your biggest bias below. Which one dogs you the most? Share this with a friend who's chasing AI hype blindly. Let's build wealth together, one smart hack at a time. See you next video.